People vote with their wallets, and I'm seeing them vote in two interesting patterns, and I'm going to get to the verdict at the end. So, one, the market has obviously rallied in the last week. It's, up today pretty strongly. It's been maintaining pretty much good strength. A little chop towards the end of the day, and that kind of progressed as the day went on, but regardless, a strong day. In Asia, just a quick note, something important to notice. Shanghai was up like 6% overnight. I have a short on GSX, which is a Chinese-owned company. I don't know if there's some market manipulation going on there. I'm curious to see what happens. That said, I'm not in China, so if anyone has any information on the inside, please let me know. Anyways, people are voting the overall market, broad rally, upwards. Now, if we look at the rally, look at the whole market, get kind of more specific into different sectors and see where people are voting with their wallet, we see that all the casinos are down pretty big today, and they even opened up. So here's the verdict. I was buying one casino I really like, just a little bit, not the full position. Just wanted to get in because it was down today, and down. I traded it, bought it before I said to start selling, sold it when I was selling and made something there. Now it's even cheaper than the first time I bought it. PENN National Gaming, so I'm going to disclose that. So all the casinos are down, and that is a high exposure to coronavirus move, and they were up in the morning. So the way I'm kind of interpreting this is there's a little bit of exuberance. People kind of saw that the virus numbers were down this morning, saw that market was up heavily in China and in Europe even too. And it's possible that there's an rush. That said, that would be a short-term outlook. And I'm not a short-term investor. I don't advise you to be much of a short-term investor. In the short term, I'm still considering the possibility of a downturn. And I don't feel super comfortable buying at this level. And I might get burned. I might have to use the extra, now 42% of my cash, at a slightly higher price. But I'm a long-term investor, so that's not going to matter too much. And, I'd rather get things on a slightly cheaper cost basis. But yeah, so I just kind of want to see how things play out, see how much higher this COVID spike gets, and see how the shutdowns go in the South. It looks like the death rate isn't moving up. That's really good. The death rate isn't moving up. I want to see that develop for a week. If that's the case, maybe we're just testing way better, picking up a lot more COVID cases, and it happens to be that COVID has a much lower death rate than we originally thought. That's entirely a possibility, and I'm considering that possibility as well. The way I look at it right now, we've had a very strong rally. I've definitely participated in that very strong rally. The risk-reward premium isn't very good. There could be, feels like there's like a balloon under us, and let's see what happens. So I'm in solidly. 58% cash, though, 48% exposure. I got those numbers mixed up before. I apologize. And, so just kind of seeing how things develop, ready to come back in, but somewhat cautious at this time. So until tomorrow, peace.